Equities ended the week on the weekly lows, but well off those lows from last week. So while we didn't end the week on a high note, it could have been a lot worse given the data we got this week, given the claims numbers we got on Thursday and the anemic job report we got today. Equities, I think, really performed quite well, if you want to put it that way, given the records that we've seen, and not only in claims but also in the non-farm payroll number we got today at down 700,000. So it was a rough week overall, and I think one of the things that we can take a step back and look at is that the selling will continue here in the days ahead. But I think at this point we can start to quantify some of the selling as we get more data in from from the month of March, which this was the first look at that. It wasn't the complete month, but certainly captured some of the shutdown, some of the lockdown, and I think at this point will give us something to move forward on. Um, I think when you start looking at these ranges that we've had over the month of March, they've been pretty much incredible. But since March 20th, it's been narrowing. We've seen ranges sort of start to normalize a little bit, if you want to call it that. Not quite normal, but normalizing, going from 200-point ranges. Now we're back. We have a range of 80 today. Today was actually the lowest range we've had, width range we've had, uh, going back for the entire month of March. So I think at this point that's gonna be something to keep an eye on, those ranges. How can we start to see those ranges tighten a little bit, take some of the panic out of the market? Obviously, we do have some darker days ahead when we start to get some real data from March. Not only the jobs number, we start looking at housing and manufacturing. Those are also going to be pretty negative. I think the market already knows that. But certainly the key level to watch now is 2,200. Now we're not near 2,200 in the E-mini S&P right now. We're still above 2,400, but that was the extreme low we put in last week. That'll be a level to watch. We get back there and we get through it, then I think there's going to be another big wave of selling behind that. So at this point right now, I think all in all, ending the week off those extreme lows is a positive sign. Not something I would certainly want to hang my hat on moving forward, but at least for this week, I think they survived. Market volatility, we saw the VIX index down below 50 for the first time since late February. But it doesn't mean that things are going back to normal either. I think at this point, the Fed being involved, the U.S. kind of standing out from some of its counterparties across the pond, maybe might be giving the volatility index a little bit of a breather, but we're certainly not going back to normal. Expect that to probably spend some days north of 50, even north of 60 in the days and weeks ahead. Any selling that we see coming into the market is going to bring volatility higher. Any sort of relief rallies may stop the rise in volatility, but it's not going to erase it. And I think 50 is going to be a level we could see for the days and weeks ahead. As we move forward, as I mentioned earlier, the jobs number, the claims number, they paint a pretty ugly picture. I do expect wider ranges to continue, despite the fact that we've seen things narrow slightly towards the end of this week. The stocks have seen, big days up and down throughout the month of March, even during this time period of lockdown and coronavirus issues. But I think at this point now, we're going to start to see maybe a sideways trade near the 2,400 level. Again, the big fear level you got to stay north of is 2,200. That was the extreme low we saw last week. If we get back there, it might act as good support initially, but if we push through, if there's any necessities for selling down there, obviously that's going to bring in a whole new set of technicals. So right now, as we end the week on the lows, it could have been a lot worse given the jobs data we saw yesterday and today. And next week, we'll get some more data. It's obviously going to be feeding on itself. And any clarity we can get from the coronavirus is going to be a positive to stocks. At this point, uncertainty is one thing that the equities fear most. And right now, we just don't have it. So as we look ahead to next week, it's all going to be about headline risk from the coronavirus, and now starting to get some of the data we get from March. That will be included as well. But right now, heading into the weekend, could be a lot worse. I'll take it as a positive in equities.